Welcome back with us here on Leaders of Tomorrow. Our second expert tonight talking about managing your money is Nitin Jain. Let's talk about FI and DI flows, strong FI flows continuing in 2021. What's your view on that, Nitin?
Absolutely. I think, as I said earlier, I think from a long-term point of view, India presents a very compelling investment thesis, right? So I see no reason. And please bear in mind, FII is a volatile stream of inflows. Equally important are FDI flows. If you'll see, even FDI flows have consistently gone up. Even last year, if I'm not mistaken, the numbers would be order of magnitude $45 billion. And they are long-term, they're more steady in nature. And I see the FDI flows continuously growing over the next few years. We are seeing very, very large pension funds, sovereign funds, private equity guys coming into the country and very actively looking to invest long-term into India. So this is a trend. This is going to stay here. I see no challenge unless we make big mistakes on the regulatory side or anything which will make doing business tougher in India. So unless we score a self goal, I don't see why in such a low interest rate regime, a country which is doing so well, where the demographics is so much in favor, will not continue to attract capital. So that's on the global flows coming into India.
Okay.
What we are witnessing, though, in the domestic flows is fascinating. I don't think I would have expected this to happen in India, but we are seeing it now. The DI flows continues to be negative in the last 1 year, right? And it's bizarre because we are seeing, on the other hand, retail flows coming very strongly into the market. So on one hand, the mutual funds, the flows are going out, but the market parts, the retail is coming directly into the market, which is interesting because the clients are saying that maybe the cost of managing funds are higher than what they're willing to pay, or they want more empowerment, or they want better funds. There's some level of disintermediation happening in such positive markets. Why should money be going out of the funds? And that's something that we have to introspect and think hard about. I don't know whether this is really structural, but this is something very counterintuitive that's happening, that the markets are going up. Money is pouring into markets, but money is going out of the mutual funds. We'll have to wait and watch how this pans out. But this is something to introspect.
This is the part of the interview where, we discuss advice. What advice would you have for entrepreneurs based on, your personal experience, perhaps something that you've seen by way of mistakes that are most commonly made when it comes to managing money that you could tell our viewers?
Actually, quite a few, to be honest. But there is no substitute to planting a tree 30 years earlier. If you had planted a tree 30 years earlier, you would be reaping fruits today. But the best time to plant a tree, if you have not, is today. So I don't think you can start earlier than when you started. So there's no point of regretting that. But now it's about making the best of what you have done. So that's point number one. But the second, I think for entrepreneurs, because I also come from a family which has a lot of business people, some of the common mistakes that I have seen people end up making are actually on the financial side. And that's something that I would love to spend more time educating people. And even in my personal capacity, I do mentor a lot of entrepreneurs. I think a common mistake, for example, is around mixing their personal balance sheet and their corporate balance sheet. What do I mean by that? Borrowing in their personal capacity from friends, family, and investing that money without thinking very hard about the cash flows of the company.
Okay.
So you will borrow on a personal capacity and invest that money in your business venture, thinking that is equity. But the cash flows have to eventually match, right? Because that is really not equity. The best thing to do is actually to work harder to work with banks and find ways and mechanisms. There are many banks, many institutions which are available today who can help you finance those ventures. But rather than actually going to the right institutions, going to the right people who can help you get those financing, people find an easy way out, going to their family, friends, and borrow that money at much higher cost, much worse terms, and finance their businesses. And I think that is a bad outcome. I've also seen another tendency of people to try and get into too many things. Start a business, get into multiple lines because they want to show growth. They want to demonstrate to their competition or people they know that we are into a lot of new lines, etc., etc. At least I have seen that the biggest amount of wealth creation or value creation happens when you are a leader in a particular line of business rather than doing many things at the same time. So my request and suggestion to anybody is to excel in whatever you're doing, even if it means that you have to compromise on the number of things that you're doing. So these are the 2-3 things that at least we have seen in the entrepreneur segment are the common mistakes that people end up making. And if you're lucky that your business is throwing a lot of cash,
okay,
and you are looking to invest that business, then that's a great situation to be in. To be honest, I think especially in the beginning, when you're starting off, there are very few people who are able to create that kind of wealth. Then be very careful about diversifying that money and being very prudent about managing that money, and not just using that to leverage yourself and expanding into unrelated set of businesses. So that would be my some experiences that I've had with a few entrepreneurs.
Nitin, you were speaking about consumer tech, and you primarily, consumer tech is what we have been discussing. But I want to talk about education and education tech, and I want to talk about health and, the health tech and the healthcare companies really. Do you have a view on any of these sectors, any of these companies?
Absolutely. I think a lot of these sectors, Nanda, are going to do extremely well, right? Whether it is consumers, whether it is technology, we see massive growth opportunities across a lot of these places. I think you're seeing various new models emerging, which is a combination of technology and consumption. There's a lot of disintermediation happening in distribution models. There is a lot of new kind of demand emerging from different client segments, whether it is insurance, whether it is education, whether it is healthcare, whether it is companies like Policy Bazaar, companies like Baiju, companies like delivery companies. So a host of new models are emerging. And we think a lot of these companies will not only do very well, but they might find a very different set of investors as well, different set of global investors. So I think these are very interesting times, and I think you are absolutely right. Some of these companies will do extremely well in India.
Nitin, any anecdotes that you have that could be shared with our viewers as we are ending today's conversation?
No, I think I am a very big believer in asset allocation, diversification, and very simple principles of managing money. When we started this journey in Edelweiss, I think I remember the initial few questions to us were always around, give us 3 or 4 great ideas in stocks. Tell us 2 or 3 good mutual funds to buy. And I think we will keep on talking to people about asset allocation, financial goals, long-term planning. But I think there was always a resistance about these kind of conversations. What we are starting to see though now, and we are very gratified about it, is that those conversations are becoming more common. Our clients are becoming more receptive towards it. And I think disciplined long-term planning is the key towards financial success. And I would request all your customers, all the viewers of this conversation, to please focus on those 2 parameters, discipline and long-term planning. If you can stick to that, I think outcomes will be awesome.
One last question then, in terms of the RBI's restructuring scheme and, any views that you perhaps have on that.
I must say, there are many ways of getting the loans restructured, because there is no such regulation which stops the loans from getting restructured. In fact, if I'm not mistaken, there is a pre-pack scheme that has got launched under Section 29A, where most of the SMEs can actually go to NCLT and along with the bank, they can get their company loan restructured under the NCLT scheme. This is like a pre-pack, and this is actually a very interesting scheme, and I think more color will come on this proposal over a period of time. But I do think most of the SMEs should figure out a way to balance out their debt and equity capital structure. If they're not able to find the right solution to their problems, I think there are many advisors on the street who help manage their capital structure, investment banks, ARCs, etc. They should seek their advice. But this is absolutely the right time to go and seek help and get their balance sheet in the right in the right health, because the next 5 years will be very good from the Indian economy point of view. And if you are ready, if you're healthy from a balance sheet point of view, I think your businesses will do very well.
I'm really out of time on today's conversations then. If you have any feedback for us, you have any experts whom you would like to hear directly from when it comes to advice as far as your money is concerned, let us know. Our contact details is on your screens as we speak. For tonight though, stay home, stay safe.